$1.7 trillion pulled. $5 trillion erased from the markets. And for the first time in 80 years, America just got hit right in the heart of its economy by its closest ally. April 2025. While Washington was still tweaking domestic stimulus packages, Tokyo struck. $1.7 trillion in U.S. Treasuries, once called strategic gold, was dumped in just 48 hours. No press conference, no negotiation, just one line of data quietly updated on Bloomberg that morning. Wall Street stared at the screen, then bled. It was the largest capital pullout in U.S.-Japan history and proved one thing: financial loyalty doesn't last forever. No bombs dropped, just one bond dump, and Wall Street went up in flames. The Dow Jones lost 4,800 points, the Nasdaq dropped 12%, and the S&P 500 fell to its worst levels since the 2008 crisis. Panic spread faster than any recovery tool. $5 trillion in U.S. market cap evaporated. Bond yields on the 10-year Treasury shot up to 6.2%. Homebuyers were crushed, businesses squeezed, credit cards suffocated. According to Fidelity, 47 million retirement accounts were hit. Major pension funds lost 15% to 20% in just 3 weeks. Personal assets collapsed, market trust snapped, and the middle-class dream was torn into shreds. Wall Street didn't need a war. It just needed confidence to vanish, and the collapse began. After dumping $1.7 trillion in treasuries, Japan didn't run home. They pivoted and attacked with capital. $300 billion into Chinese and Indian bonds, $200 billion into Southeast Asian infrastructure. Reserves in yuan and rupee jumped 40%. USD holdings were slashed from 54% to 35%. This wasn't a tantrum, it was a chess move years in the making. And no, the US wasn't blindsided. Japan had warned. Stop taxing our EVs. Stop manipulating the yen. Stop treating us like the junior partner. Washington didn't listen. So Tokyo pulled the plug. No threats. No sanctions. Just stopped buying US debt and started investing elsewhere. The result? America lost its buyer, its leverage, its seat at the head of the table. China? Not a chance. They slashed their U.S. bond holdings from $1.1 trillion to under $800 billion in 5 years. Europe? Too busy saving itself. The Middle East? Now trading oil in yuan. When Japan walked away, America realized no one else was standing behind them, and the system began to crack piece by piece. No trade war. No press release. No post on Truth Social. Asia didn't declare a dollar exit, they just flipped the switch. In private meetings, Japan, China, South Korea, and ASEAN launched a new financial network. No ideology, just numbers. $1.2 trillion in regional currency swaps. Cross-border trade with no more USD. By the end of Q1, 62% of Japan-China trade ditched the dollar. Yen and yuan surged in global payment systems. No speeches, no drama, they just stopped using it. And when the majority stops, the dollar becomes the one left behind. No weapons, no shouting, just trust quietly moving elsewhere and the old system collapsing on its own. At the G20 summit, one piece of paper was handed around, thin as rice paper but heavier than any sanction ever written. A proposal for a new global reserve basket. And no, the dollar wasn't invited. No more exclusive control. No more Fed setting global rates. The new basket? Gold, energy, defense tech, Asian and European sovereign bonds. According to the IMF, USD's share of global reserves dropped to 52.7%, the lowest in nearly 30 years. Yuan and yen rose faster than at any point since their global recognition. No one's turning their back on America. The world is simply choosing a new path, one where they don't need permission to use their own money. This isn't a collapse, it's a shift change. The dollar wasn't defeated, it was simply moved aside. Europe is ready to assume its responsibilities. Rearm Europe could mobilize close to €800 billion of defense expenditures for a safe and resilient Europe. The EU just announced an €800 billion program for Readiness 2030, marking a turning point where allies are turning away from US weapons. Under Trump's leadership, several prominent voices linked to the European defense establishment suggested the US had built so-called kill switches into aircraft, allowing Washington to remotely deactivate or limit the combat functions of Allied forces. Many countries around the world are beginning to doubt the safety and stability of using US weapons. Concerns revolve around the possibility that the US could disable weapons sold to its allies by stopping the supply of spare parts or activating a remote kill switch. This not only causes concern among countries purchasing US weapons but also serves as a wake-up call for America's strategic partners. As trust in protection commitments from the Trump administration continues to decline, Rasmus Jarlov, chairman of the Danish Defense Committee, issued a clear warning. We can no longer trust the US. He emphasized that purchasing weapons from the US poses a significant risk to national security, especially when the US could use its allies' dependence on weapons as a tool of threat. Jarlov even expressed fears that the US could demand Greenland, and if Denmark refuses, they might disable Denmark's weapons and allow Russia to attack. This is not just a theory. Trump himself openly stated at the White House that he would sell reduced power versions of weapons to allies. We like to tone them down about 10%, which probably makes sense, because someday maybe they're not our allies, right? This led countries like Canada, Portugal, and France to reconsider their F-35 fighter jet orders, with some nations deciding to switch to purchasing weapons from European or Australian manufacturers. Not only countries outside of Europe but even EU members are beginning to push back against US defense policies. With the €800 billion Readiness 2030 program, the EU is prioritizing weapons purchases from Europe, Japan, and South Korea. European Commission President Ursula von der Leyen confirmed, "We need to prepare for a scenario where the US is no longer a strategic partner." This is a clear signal that the EU is no longer dependent on the US, but instead is building an independent defense force. Another sign of this shift, Canada has decided to pivot toward Australia. Canadian Prime Minister Mark Carney announced a $6 billion Canadian cooperation project with Australia to develop an over-the-horizon, long-range radar system. This is a significant change, showing that Canada is seeking other partners instead of relying on the US. Finally, we cannot overlook the puppy diplomacy tactic of the Trump administration in Greenland. Usha Vance, wife of Senator J.D. Vance, visited Greenland as an unofficial representative, angering the Danish people. They emphasized that Greenland has been part of Denmark since 1380, twice as long as the United States has even existed. No one in Greenland wants to become American. This is a major challenge to U.S. foreign policy under Trump. Meanwhile, the U.S. economy is collapsing, and over 60,000 people from Denver to Tucson have risen up to protest Trump's policies. While billionaires and politicians continue to live lavishly, the people are demanding justice. Are you among them? For the American people, this could lead to a severe economic recession, skyrocketing inflation, and a shrinking GDP. These issues won't just affect large corporations, they will directly impact living costs, jobs, and daily life for everyday Americans. Americans imagine struggling to make ends meet while policies from above push the economy down an even more difficult path, leaving wages stagnant and the cost of goods soaring. This is the reality that many Americans are facing right now. While Donald Trump is continuing his vacation at Mar-a-Lago, the U.S. economy faces a future filled with uncertainty. Experts at J.P. Morgan have warned that if the U.S. government continues with its tariff-heavy protectionist policies, the economy will slow down significantly, and the U.S. could fall behind strategic competitors like Japan, the EU, and China in the next 10 to 15 years. This means the U.S. could lose its leadership position in global technology, manufacturing, and trade. The increasing competition from other countries will make the U.S. economy too weak to maintain its dominance in trade and technology, increasing the gap between rich and poor nations. As the economy weakens, the American people have no choice but to stand up. Their uprising is not just a simple protest but a call for massive change. But will the government listen before it's too late? As economic hardships become unbearable, Americans are pouring into the streets to protest Trump's policies. From Denver, Colorado, where over 35,000 people gathered, to Tucson, Arizona, where the turnout was 8 times larger than expected, everyone carries a powerful message. We will not accept a country run by billionaires. We want a fair government, one that doesn't sacrifice the many for the few. These protests aren't limited to major cities. They are spreading to rural areas, industrial zones, and schools, where people can no longer bear the weight of their struggles. These movements represent a powerful wave of resistance, the voice of those affected by policies and worsening living conditions. These protesters are not disruptors. They are citizens directly impacted by failed economic policies, those who have suffered while billionaires and the powerful continue to enjoy lavish lifestyles. The government must listen to them before it's too late and this uprising becomes an unstoppable wave. With a weakening economy, the people are rising up, but will the government respond in time? If you watched the previous episode, you'll understand why things are spiraling out of control. Stay tuned as we dive deeper in this episode. Tourism is no longer just about vacation, it's now a political statement. Canadian tourists are boycotting U.S. travel. Every year, millions of Canadian tourists cross the border into the U.S., from Florida to New York, spending billions of dollars on travel services. However, this year things have changed dramatically. According to the Old Orchard Beach Tourism Council, Canada accounts for 40% of the tourists in the area, but this year that number has sharply dropped. Hotel owners like Sterling Morrison in Maine report that over 90% of their Canadian customers have cancelled their trips, causing severe losses for local businesses. These numbers reflect a major disruption in the tourism industry, especially since Canadian tourists have been a stable source of income for many regions. This is not only impacting the economy but also weakening the economic relationship between the two neighboring countries. So, why is this happening? Trade tensions and hostile rhetoric between politicians have led to this shift. This is not just about a tourism boycott but a clear expression of national pride for many Canadians. Traveling to the U.S. is not just for fun, it's a recognition of a peaceful and respectful relationship. The tensions in international relations have eroded these values, leading to the decision not to travel to the U.S. as a way of protesting the administration's policies. This is also a signal that countries will no longer tolerate decisions that can harm mutual respect. According to the Maine Tourism Council report, Canadian tourists contribute about $1.2 billion annually to the local economy. Each Canadian tourist spends not only at resorts but also in shops, restaurants, and attractions. This boycott could force many businesses to close or scale down operations during the tourist season. This issue isn't just affecting the tourism industry. Other industries like transportation, lodging services, and retail stores are also being hit hard. Businesses may need to find replacement customers or accept declining profits while costs remain unchanged. In the midst of a struggling economy, the absence of Canadian tourists not only reduces revenue but also puts small businesses at risk of closure, deepening the economic crisis in the region. This isn't just tourism, it's a political statement. So, is tourism still just tourism? It's time we realize that tourism can now be a powerful tool for political statements. When people choose to boycott a country not because they dislike the tourist attractions but because of that country's policies and statements, it becomes a lesson in national pride. With 40% of the tourists at Old Orchard Beach being Canadian, this change could have far-reaching impacts. This isn't just a loss in revenue but a message of dissatisfaction with the U.S. national policies. This tourism policy has now become a tool to express political views. It reflects not only the resistance from the Canadian people but could spark similar movements from other countries, where tourism becomes a means to show discontent with U.S. international policies. This event is not only a blow to the U.S. economy but also a lesson in respect within international relations. When a country decides to stop cooperating on tourism and consumption, it's not just about dissatisfaction but a form of resistance to actions that could harm their values and sovereignty. It also shows that tourism isn't just about moving from one country to another, but now it's a part of soft power strategy. The Canadians are teaching the U.S. an important lesson in self-respect and respect. How will international relations change after this event? Will we see other countries adopt a similar strategy, using tourism as a tool to express dissatisfaction with the policies of other nations? To find out what happens next, stay with us and watch the rest of the video. Right after the closing bell rang, the President held a press conference from the Oval Office, a timing that avoided immediate investor response but created an uncontrollable ripple effect. What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. With over 6 million imported vehicles per year, this is not a routine policy. It signals a complete restructuring of the global auto supply chain. Markets responded instantly. CNBC reported that auto stocks dropped sharply. GM lost over 5% within minutes. Beyond the auto sector, the President extended the tariff plan to pharmaceuticals, a sector where the U.S. relies heavily on imported active ingredients. According to the FDA, about 72% of pharmaceutical ingredients come from abroad, mainly from China and Ireland. In order to bring our pharmaceutical industry back, we don't make anything here for drugs. It's in other countries, largely made in China. This means higher manufacturing costs and likely higher drug prices. Seniors, chronic patients, and low-income groups may face serious consequences. Despite clear signs of concern, the President showed little urgency. That'll all take care of itself. That could take care of itself in 1 day, 2 days, or 1 week. But for millions of Americans with 401 kiloseconds, IRA, and stock investments, this isn't a temporary dip. It threatens retirement funds and long-term financial security. Such indifference risks damaging public trust. During the press event, the President was asked about Signalgate, where senior officials allegedly shared military plans via unsecured group chats. Hegseth is doing a great job. He had nothing to do with this. Hex, how do you bring Hegseth into it? He had nothing to do. Look, it's all a witch hunt. But leaked texts revealed direct action steps. 11:44 Eastern, go for mission launch. 12:15, F-18's launch. 13:45, strike window starts. These are strategic military coordinates. Leaking them could violate the Espionage Act and jeopardize operational security at a time of global volatility. Immediately after his strong remarks on tariffs and security, the President pivoted to talk about whales and coal. Something happened out there. There's something driving the whales a little bit loco, but they lost 2 in 20 years, and now they lost 17 in a short period of time. And they're using coal, which is very powerful. Coal is a very powerful energy, and we're opening up our coal mines again, and we're going to do. I call it beautiful clean coal. The technology is so good now that coal can give you tremendous power, at the same time, it can be very clean. But we're also obviously doing oil and gas and various other things. You can do pretty much whatever you want. We don't like the wind because we think it ruins the landscapes. The planes ruin them. This abrupt shift confused viewers and investors alike. Is the administration focused on economic stability, security, or traditional energy? Mixed messages like these breed uncertainty, which can slow growth and fuel inflation, a classic formula for stagflation. At the same time, data from the Atlanta Fed painted a worrying picture. GDP for Q1 2025 is projected to shrink by 1.8%. Other models warn of a -3% contraction. Just last quarter, under the previous administration, GDP grew by 2.3%. Stagflation, rising inflation alongside falling growth, is one of the toughest economic conditions to overcome. While the U.S. economy faces internal pressure, Canada and the European Union have begun voicing concern. Several international companies are now delaying investments, awaiting clearer economic direction. Could we be witnessing the beginning of a new global realignment? Are America's traditional allies pulling away? Stay tuned for the next developments to uncover the surprising twists in this unfolding story.